I want to tell you a little bit about Bitcoin 2020 conference. Bitcoin 2020, like this podcast, is presented by Bitcoin Magazine, and the team there has been working hard to create an event that Bitcoiners deserve. I'm telling you guys, it's going to be crazy. Bitcoin 2019 was crazy and incredible, and many Bitcoiners left telling me that it was the best Bitcoin event of the year. It's going to be like a Bitcoin Twitter in real life, and Bitcoin 2020 is going to be twice as big as Bitcoin 2019. The festivities are going to be going on all week, the last week of March. It's going to be a Bitcoin week in San Francisco. I believe the first event is on the 24th, but the official conference is not until Friday, March 27th, and the second day, Saturday, March 28th. I can't wait to see you all there. For those of you who have not bought your ticket yet, you can use code CK for a 20% discount when you check out with Eventbrite, or you can pay in Bitcoin where you'll always get $50 off your purchase. Like I said, hope to see you at Bitcoin 2020, but until then, please enjoy BitcoinTINA on Bitcoin. All right, everyone. Welcome back to BitcoinTINA on Bitcoin. This is part number 3. Thank you so much for joining us on this adventure, and I hope you have been enjoying the past 2 episodes. Episode 3 is going to be about how to think about investing in Bitcoin. It's a lot easier than you think, and guess what? It is not trading. That's enough of me. Let's get right into it. BitcoinTINA, how are you doing?
I'm doing great. Thanks, EK. I really appreciate it. I'm hoping to get some really simple ideas across that I think are effective for people making money in the long run. We have too much short-term thinking, and I think that we need to focus on the longer run because that's really where the big benefit of Bitcoin is going to come. From my perspective, the single most important thing in understanding the value proposition of Bitcoin is the idea of scarcity and liquidity. The best example we have of that is gold, which is both scarce and very, very liquid. You can move literally hundreds of millions of dollars worth of value in gold. You could buy or sell a few $1 billion worth of gold in a day and not move the price very much. Bitcoin is more scarce and ultimately, not now, but ultimately, in my opinion, will be much more liquid than gold is. We have things which are scarce. We have things which are liquid. We have very few things which are both scarce and liquid. Gold is the single best example of that. Bitcoin is far more scarce. We have a fixed supply. The supply is supply inelastic. Inelasticity is a term which some of you may or may not be familiar with. It means that if the price of Bitcoin goes up very dramatically, you can't get more of it because what will happen is every 2 weeks approximately, I think every 2016 blocks, there's a difficulty adjustment. So what ends up happening is the net effect of the price going up and more people wanting to mine for Bitcoin, engage in the hashing algorithm, will be to bring more security to the network and will not net find all that much more Bitcoin, except in as much as it will drive you faster to that 2016 blocks. So you can have an aberration for a period of time, but it's going to drive the difficulty adjustment up.
This is different than other precious metals and gold because if, let's say, copper or silver or even gold go up tremendously in value, then the amount of expenditure towards getting more of it out of the ground increases. Gold is the most resistant to this effect, but that's why copper isn't money, because if copper increases in value, it's relatively easy and inexpensive to get a lot more of it.
That's exactly right. And even with gold, what will end up happening is you might have gold ore deposits, which are not profitable unless you're mining gold at $5,000 or $10,000, let's say, but they will be mined as the price goes up. With Bitcoin, the difficulty adjustment will prevent more Bitcoin from being mined. So it will slow down, even though you have a lot of miners trying to engage in hashing for / mining for Bitcoin. It will slow that process down. In my opinion, the most effective strategy is ultimately buying a position and holding it. Some people might want to engage in dollar cost averaging. Generally, I have found over the years that many people think they can trade. And I think they can trade because it's very easy to open up an account and to start trading. But if we put it in different terms, how many of you people out there really think that you can go play pro ball? How many of you think you can get on the field, whether it be football or basketball How many of you think you can get in the ring with the prize fighter or the MMA champ and think you can duke it out with them and survive? Let me tell you, you can't. You're nowhere near that good. You can't get on the field and play pro football or get on the court and play pro basketball, even with the worst players on the team, much less be the best player on the team. You're not Stanley Druckenmuller. You're not Paul Tudor Jones. You're not going to be that guy. And I know you really think you can be. I know you're sure of it because you've heard all these different guys tell you, you can do this. You can learn to trade. You can be a great trader. But the reality of it is actually different. There's actually very few people who can do that. The really great traders actually want you to trade because they're there to pick your pockets. That's why they want you there so very, very, very much. Because if you don't know who the sucker at the table is, it's you. And they're there to make money off of you. If you just buy and hold your position, as you guys know, we call it hodling. If you just hold your position, you're going to ride up and ride down, but net, you're going to be there for the longer time frame. And as the value starts to become realized by people who understand what this thing is worth, and the prices move to the next overall level, you'll be there and you'll make that money. If you're like most people who are trying to trade, you're going to get cleaned out before that happens. So even if you can only afford $1,000 or $2,000, if you try to turn that $1,000 or $2,000 into $10,000, odds are pretty good you won't. Odds are pretty good you'll lose your $1,000 or $2,000 or $10,000 or $100,000. You're not going to turn that into big money. Almost no one does. And by the way, you may not have ever seen the TV show House. Great show, by the way. House loved to say, everybody lies. So when your friends tell you they're trading and they're making money, don't believe them because they're lying. Because most people don't make money. The fact of the matter is, they really don't. I heard a story this past weekend. Somebody told me, a friend of theirs, they love to gamble. They go to the casino all the time, and the casino tracks them with their player card. They said, can you believe after all these years I've broken even with the casino? And I said, actually, I can't believe they've broken even with the casino because the numbers say different. People don't break even with a casino. It's nearly impossible to go up against those numbers. You're going to lose. You play long enough, you're going to lose. You trade long enough, you're going to lose because you can't break discipline at all. And we all think we can do it. I did for years. Other people do. And you'll say, oh, well, Tina, you couldn't do it. So that doesn't mean I can't do it. I'm telling you, you can't do it. And you're going to try. But that's not the smart move. The better move is to understand how big a bull market this is and the fact that if you begin to understand why you want to own Bitcoin, why this is so powerful, why it's so meaningful, you're so much better off dollar cost averaging if you don't have the money, or buying your position and holding on to it and adding when you want to put more in. Now, I'm not saying you shouldn't look to take a little bit off. If you're up 10x, take some off, take 5% off, take 10% off, whatever. Take a small amount off, take 20% off, and that's fine. Risk management is critical, but it's understanding that bigger picture. The volatility of this thing is such that Bitcoin can move up or down 10, 15% very quickly. And we tend to want to be buyers when we ought to be sellers. We tend to want to be sellers when we ought to be buyers. And it's just extraordinarily difficult to trade this thing. So if you have to trade it, trading it over much longer time horizons and smaller amounts is probably the better way to go, in my opinion. And I think it's very hard for a lot of people to really make that a part of their psychology because we really want to believe that there's some free money to be had out there. But the fact of the matter is, if you look at almost anything people do, there is no easy way to make money. We all want to imagine that there's some magic answer out there. And it'd be great if there was a magic answer, but there isn't a magic answer. And generally when it comes to most investing, time, if you know what you're doing, can be your friend. And when you start to try to do things in shorter time frames, you're likely to lose. And the odds are pretty high. And when you lose your nut, when you lose that bit of money you have to work with, it takes time to make that money back. And you really don't want to do that. You really don't want to take what is the biggest bull market in all history and waste this thing. And I know so many guys. There's a guy I fight with all the time on Twitter. I really feel bad for this guy. He would have had so much more Bitcoin had he just held on from several years ago. And he's convinced he's right. This guy is going to be very bitter years to come because he's going to be very mad that he tried to do this stuff. And I'm really doubtful as to whether or not this guy is making any money. I don't think he is. People who talk about it a lot are almost never making a lot of money. People come up with all these crazy different trading schemes. They're coming up with these trading schemes because they're not making money. You're not George Soros. You're just not. And just come to terms with that fact. But you don't have to be. In the 90s, we saw things go up 50, 60, 100 times, 200 times, 300 times. Bitcoin's bigger than all this. You don't have to be that good. You just have to learn to hodl. You just have to hold on to the damn position. And it's so hard to do. Hodling is really, really hard. I was listening to somebody the other day. They were talking about how if I'd only bought Bitcoin back in 2012 like you did. I didn't buy Bitcoin in 2012. This was somebody I was listening to. If I'd only bought Bitcoin back in 2012 or 2011, if I only paid $10 for it, man, I'd be so rich today. The guy said, no, you wouldn't. You would have sold it a long time ago. You'd have sold it when you doubled, or you'd have sold it at a loss. You wouldn't have been holding. You wouldn't have been there. I think, and I can't prove this, but I don't think there are that many people who are in Bitcoin from $1, from $10, from $100. I think there are a lot of people that bought at those levels and sold. Maybe they made some money, and maybe they took their losses and left. Most people lie. Most gamblers tell you about what they've won. They almost never tell you about their total net position. They don't tell you about their losses. The same is true with most traders. The best traders, the smartest traders, don't usually talk a lot about their trading. They usually don't want to tell you what makes them good, because sharing that information actually doesn't benefit them. There are very few traders who will tell you how to trade well, because most trading has more to do with money management than it does with looking at charts, reading charts, or divining what these things tell you. You're never going to figure out, and by the way, for Bitcoin, this is one of the things I have against the chartists, and I'm not saying you can't learn things from looking at the charts. I'm not saying you can't learn things from on-chain analysis. Sure, you can learn things, and there's information to be had. But what you're not going to know is, you're not going to know the people whose mindset is changing. You're not going to pick up when the zeitgeist in society starts to change, when those opinions start to flip. When the guy who is worth a ton of money decides, I got to own me some of this. And they decide, you know what? I'm going to go take a 1%, 5%, 10% position in this thing because I got to own it. You're not going to read that in the charts, because it's not going to be in the charts, because they weren't even in the market before. This is a brand new asset for most people. And so that's not going to show up. You might be able to learn some things, but even I hear people say this all the time, and it makes me completely crazy. They compare what the market is doing today with what the market did in 2015, or what the market did in 2014, or what the market did in 2012. We have no idea what the market's going to do tomorrow, because this thing is so young. Now, maybe you can figure something out in the stock market about what the market's going to do off of technical analysis, but I'm dubious about that. But you're not going to figure that out in Bitcoin, which has only been trading since like 2010. This thing's barely been around for any period of time, and at this kind of market cap of $160 billion, it's been around like this for 2 years. You're not going to know anything special about how this thing is going to trade. And people want to fool themselves. I remember I once had a professor who told a story about an ant that was sitting on the trunk of an elephant, who pretended that he could steer, so he thought he was steering the elephant. You're the ant on the elephant, thinking you're steering this market. You can't figure out what this market's going to do. I know you want to talk yourself into that idea. I know there are lots and lots of guys selling you technical services or giving these things away for free and telling you how smart they are and telling you how great they are and how they never get it wrong, or sometimes they get it wrong, but they mostly get it right. Trust me, the guys who get it right don't talk. The guys who are making tons of money don't tell you how much money they're making, because they have no interest in telling you. Guys who are making money keep their mouths shut. Bullshit artists, I'm sorry for cursing, but bullshit artists will tell you how great they are. Trust me, they're not. They're liars. I know it because I've seen this over the years. The guys who got the goods don't talk about it because they don't have to. They just go and they make their money and they do what they do, and that's that.
And they have exponentially more resources too.
Absolutely. They don't talk about it. They really don't. The guys who make the big money generally don't have the need to brag either, because they're making the money. It's pretty obvious. It's obvious to everybody. I think Bitcoin is insanely cheap here. I think what's going to happen is that more and more people will come to understand how valuable an asset, which is scarce, which is supply inelastic, which is also becoming liquid, what this is worth, and why people want to hold their money in it. Many people talk about the scaling layers, the Lightning Network, Liquid, and other scaling layers. And in my opinion, for the decade of the 2020s, this is actually not that important. I know there's a lot been made of Lightning, and I think Lightning is great, and I think Lightning is going to become a very, very, very big deal. I think it will become much easier to use over time. I know that the UX and the UI is not simple right now. I am told that it's much easier to develop on Lightning than it is to develop on Bitcoin. It is going to generally be much easier to develop on scaling layers. I expect we're going to see a lot of very creative people who come up with great ideas and drive that payment side forward. But that's not critical for Bitcoin going up an enormous amount over the coming decade. All that has to happen is people start to understand that one person at a time, they come to the conclusion that an asset which is scarce and divisible and easy to buy and easy to hold on to and relatively easy to store and relatively secure is worth a lot of money. That's all that has to happen. I have on my Twitter profile dominoes falling over one at a time, just a series of dominoes. And I call it negative opinions changing on Bitcoin. And that's what this thing is. I have said over the years that people go crazy, and I heard this from somebody, it's not mine. People go crazy all at once, but they become sane one person at a time. That's the way riots work. Riots, mass of people go nuts, and one person at a time, people become sane. Well, we're in the middle of a financial riot. We're in a world where there are no rules anymore. The Federal Reserve has no rules. They're doing things which, if you talked about them 20, 25, 30 years ago, and you were a serious analyst on Wall Street, people would have said you're nuts. Negative interest rates, quantitative easing. Repo, where the Fed comes in and drops $500 billion in repo in a few months. These are crazy, crazy things. And I think that the world overestimates the risk in Bitcoin and underestimates the risk in the legacy system. I think the risk in the legacy system is extremely high. And people say, my God, how can you say something so radical like that? Because I think it is. I think we have a legacy system which is completely run amok. And it's hard to put yourself back. I mean, many of you were too young to put yourself back, 25 and 30 years because you were either in diapers or you weren't born. But the fact of the matter is, talking about negative interest rates, this is an insane proposition. Talking about quantitative easing, this is an insane proposition. This is not the way our money system is supposed to work. Our money system has gone completely wild. Bitcoin is a rational response to not being part of that and having some money that you can secure, which is outside of that. I'm not saying you should sell all your stocks. God, no. Keep your stocks. I don't care. But you have to own some Bitcoin. 1%, 2%, 5%, 10%. Have some money which is not in the system. Have some money which, if you control your own private keys, you actually have money you control. People like Caitlin Long and Trace Mayer have talked about what happened with Dole Foods, how they found when there was a merger that on one set of books, it looked like 30 some odd million shares, and on a different set of books, it was 49 million shares. So they couldn't even get the numbers to jive between what the company thought it had and what Wall Street thought it had. Wall Street thought it had 49 million shares, and I think the company thought it had 33 or 36 million shares. And the numbers were all wrong. You don't own your stocks. You don't own the money in the bank. It's not actually yours. You are a creditor on these things. You don't actually have title of your stocks unless you have it in your physical possession, paper stock certificates. But who has paper stock certificates today in 2020? Paper stock certificates are a thing of the past. You don't own your money in the bank. If the bank fails, you're a creditor.
One of my favorite quotes that we kind of have here is the Richard Russell quote about gold fever.
There's no fever like gold fever, and I think there's no fever like Bitcoin fever. And as people come to an understanding and start to say, I got to own me some of that, it's going to be wild. And we've seen this from time to time in the last several years. We've seen how this happens, and I think this gets bigger I've heard lots of people say, well, it's going to be harder to move this asset because it's going to be so much larger in size. But I think the period that we have in 2020, 2021, 2022, the last 2 years woke the world up to Bitcoin. Most people didn't know about Bitcoin in 2015, 2014, and on back to 2009. They didn't know about Bitcoin until Bitcoin went to 20,000. And now we've been in a bear market basically since its highs, 20,000 at the end of 2017. I actually think the bull market probably started at the beginning of April of 2019, but that's beside the point. We're still sitting at 8,600 right now, which is well below the 20,000 peak. And most people won't think we're in a bull market in Bitcoin until we're past 20,000. And I wouldn't necessarily argue with that point of view. I think you're going to start to see people really build, and there's going to be a building pressure to own Bitcoin. But in those prior periods, you had far fewer people in Bitcoin and buying Bitcoin, and now the whole world has woken up to it. A lot of people keep saying that the bull market has to become more elongated and bear markets have to become even longer. I don't know that that's necessarily so. I think this coming bull market may be much more like the first bull market when it was still relatively new and relatively small. You're going to have hundreds of millions of people coming into Bitcoin with enormous amounts of money. This asset is still a very small asset. At $20,000 Bitcoin, you're talking about an asset which is going to be in the neighborhood of $360 billion or so. Yeah, 360, 370 billion at 20,000 Bitcoin. At 100,000 Bitcoin, it's going to be $1.9 trillion. 1.8 and 1.9 trillion sounds big, but not big relative to other major markets. It's big relative to companies, but Bitcoin's going to be measured relative to markets, measured to things like gold, to stocks, to bonds. It's its own thing. It is a giant market which is in formation, not a company. So Apple may be however many trillion, 1 point whatever trillion, but Bitcoin is different. Bitcoin is special. Bitcoin is a market. It's going to be measured against gold. It's going to be measured against the bond market. It's going to be measured against real estate. It's going to be measured against the global stock market, which is in the $80, $90 trillion range, not measured against a company. Bitcoin, even at $100,000, is still, in my opinion, relatively small. I think Bitcoin just starts to get interesting when it equals gold, which is the $450,000, $500,000 range. And I think these numbers are going to come upon us very, very, very fast. People say, where are all these new buyers going to come from? They're going to come from the boomers you like to make fun of. Boomers like to make money too, believe it or not. Guys who are 50, 60, 70, you know what? They love making money. I know lots of rich guys who still love to make money. And you think those guys don't want to make money? Those guys are going to come in with $1 million, $2 million, $10 million. And they're going to buy like crazy. Because even that rich guy, you're laughing at him, the guy who's 60 years old, he's driving the Bentley, and he's got 3 houses. He's got one in Florida and one in New York and one wherever the hell else he's got a house. He loves making money. That guy, he's thrilled to make money. You think he's not going to buy Bitcoin? Why? Because he's going to be afraid of it? He's not afraid of it. He buys Tesla. He buys all sorts of other things. It's just another thing to buy. He may or may not store his own keys. He may not self-custody. That's a mistake. That's foolish. And we're going to want to teach him that he's going to want to do that. But he's going to buy Bitcoin. He's laughing at it today. But I promise you, when he thinks he can make money and he doesn't think it's a joke anymore, he's going to be in there and he's going to be buying hand over fist. Jim Cramer, I promise you, will be on TV saying, you got to buy Bitcoin! You got to buy Bitcoin!
So I feel like this really kind of gets to the next point, which is like price will drive behavior. As the price goes up, as Bitcoin's natural marketing progresses, people will turn and look. And we already saw an example of this in 2017. If you don't see the kind of ripple effects from 2017 in the conversation in the general public about Bitcoin, then I don't know what you're looking at. And if something similar to 2017 happens again in 2021, you bet those ripples are going to turn into tidal waves.
Price is the single most important thing in any economy. There is nothing more important than price. Now, why is that? Because price conveys a lot of information. Price moves consumers and producers. Price causes us to buy one thing versus another. We make valuations based on price, but price of assets like Bitcoin, like stocks, drive us to buy them. We chase prices up. We buy them like crazy. And as prices fall, we dump the assets. But here's an interesting thing about Bitcoin. This is actually a little bit different from stocks. I've thought a lot about this. When a stock price goes up, it makes the company more pricey. It makes the company more expensive to own. But when Bitcoin goes up, as more people own it, it actually does, in fact, become more valuable. Not just a larger market cap, but it's actually worth more. If 1 million people hold Bitcoin and are willing to pay $8,000 for it, let's say, it's actually worth more when 50 million people want to own it. There's a bigger demand for it out there. There's a bigger marketplace for people who want to hold that Bitcoin. And so the value of it actually increases as more people decide, I want to hold this thing. So not only does the price go up, but the value also increases. It becomes a better asset to hold. The more people who start to understand that they want to hold this asset makes the asset more valuable. When you and your neighbors all decide, I want to own this thing, you're actually making it more valuable when all those people come into thinking that I want to own this thing. That's not true of a stock. When Apple Computer goes up, it's not becoming more valuable. They're becoming more valuable as they have more customers. But in a sense, you're a customer of Bitcoin, even though it's not a company, by wanting to hold it. So the market size of hodlers actually increases its value. And I don't know if we always think about this that way. And I think this is something that people need to think about. And so when more and more people want to hold this, when they want to store value in it, when they want to hold value in it, it becomes more valuable. And as the understanding of why you want to hold value in it becomes more prevalent, more widely known amongst people, they want to hold this. And I think that is an idea which is very hard for people to get. And I don't know if that idea has really managed to get across yet. I'm going to go out on a limb here. And I think that stock to flow tells us Bitcoin's worth $100,000. And what that's really telling us is that through teasing out the pricing information in prior periods, that when you model it against stock to flow, Plan B tells us the stock to flow model is about $100,000. I expect us to overshoot that. I expect us to see $200,000 to $400,000 Bitcoin in the course of the next 2 to 4 years, 2 to 3 years. I expect us to well overshoot what that stock to flow model shows us. I think that even at $100,000, there are going to be many people on Wall Street, many chairmen of the boards of banks and financial institutions who still don't take Bitcoin seriously. I've been saying for a while that CEOs are going to lose their mind as prices go to these levels. And what's interesting is I've noticed actually there's a lot of activity already happening on the part of many companies that are already trying to get into Bitcoin and quietly figure out how to deal with this. There may be fewer CEOs that lose their minds because companies are already starting to figure out that this is a really big thing. And I am expecting that as we see prices go to where I think they're going to go, $100,000, $200,000, $300,000, $400,000 potentially, that you're going to end up seeing an enormous amount of investment money coming in, not to buy Bitcoin per se, but to figure out how do our businesses get involved with this? What do we do to make Bitcoin a part of our business? And I think you'll see an enormous amount of investment come into this space. And you're already seeing it. You already have companies like Fidelity that are actively involved in Bitcoin. You already have companies, State Street Bank has joined with Gemini State Street Bank is a giant custody firm. You already have things that are happening. Visa acquired Plaid, and Plaid have an aspect of that application which deals with Bitcoin. So you're already seeing major companies thinking about these issues.
Just for context, Plaid is the main way that almost all fiat to Bitcoin or fiat to crypto exchanges connect your bank account to their system. Any challenger finance application is most likely using Plaid in order to connect your legacy bank account to their system.
So that means that Visa, now owning Plaid, is involved in Bitcoin. So no matter what they say, they're actually involved in Bitcoin, and they're going to be making money off of it. And they're finding a way to incorporate that into their business. I think you have people already taking this seriously, and these businesses are taking this seriously. And many people who do not see or understand that this is happening are not taking Bitcoin seriously. and they're missing an enormous opportunity. So you have these traders who are whacking around prices, playing for literally pennies, and missing huge opportunities for doing dumb things and really relatively small moves. I think we're going to see even bigger investments in the Bitcoin ecosystem as we see these prices go up, and I think it's going to be quite staggering. And I think we're going to go from a period where there aren't that many people talking about Bitcoin to pretty much everybody talking about Bitcoin. It was that way with the internet. Pretty much nobody talked about the internet. Then everybody talked about the internet. Now nobody talks about the internet. Everybody just lives with the internet. Ford had said, this is a great quote, that if he had asked people what they wanted, they would have said faster horses. And it's so hard for us to understand sometimes how the world is changing and changing in such very big ways. I think that what we saw with computers, when I look back on my life, is that computers were, this may be hard to believe, and I don't know if I said this before, computers were not taken seriously by people, believe it or not. Businesses did not take computers seriously. It was Lotus 123 that caused many businesses to say, we have to buy a computer and we have to have computers because we can take advantage of using that spreadsheet. I think you'll see in the next few years, people create applications that become obvious for people to say, I want to get involved with Bitcoin. But from my perspective, we already have that. Bitcoin already has its killer app. Its killer app is money. Money is Bitcoin's killer app. And we don't necessarily think of money as being a killer app, but money is so intrinsically important to humans. And being able to store the value that we work for in a good money is just not available. And it's hard for us to imagine that we already have that killer app. And that awareness, as that awareness grows, more and more people will want to own Bitcoin. I heard a story about a guy whose family was in the horse and buggy business, and they were very rich from that business. And they were very doubtful that automobiles would take off. And they were concerned that there wouldn't be enough gas stations around for people to fill up their cars. And so they didn't take automobiles seriously, and they put themselves out of business. The world often changes in ways that we don't understand, and it changes very fast. And there are a lot of people, I think, who understand what's happening with Bitcoin and how meaningful this is. You want to be one of those people. You want to own this thing because by the time most people realize this, you'll simply be able to own much less. Today, at $8,600, there's still many people who still can't afford to own one Bitcoin, but that's going to become an even harder bar to reach at $20,000, at $100,000, at $1 million. And that's going to happen. And it's going to happen very, very, very fast. 2 years, 5 years, 10 years. 5 years, 10 years, it's not very long. It might feel long to you if you're 25 or 35, but if you're 55, 65, it's not very long. And time goes very quickly. The opportunity in this thing is really hard to understand for people. The world changes very, very fast, and it's so hard to understand sometimes how it's changing. But as I was saying, we already have the killer app in Bitcoin. That killer app is so amazingly valuable. And sometimes people will say, oh, well, we're waiting for these things to get easier. Well, let me ask you a question. If you can make 10 times your money, 20 times your money, 100 times your money, isn't that worth putting a little bit of time into something to figure out how to do something right? If you have $100,000 and you could turn that $100,000 into $1 million, into $10 million, isn't it worth your time to try to figure out how to store your private keys the right way? Isn't that worth it to you? Is the answer, oh, well, that's just too hard for me. I can't do that. Ah, really? You're that stupid? I mean, I'm sorry. You're really that dumb? If you have $5,000 and you could turn that into $50,000, $500,000, you don't have the time in your day, you don't have the time in a week, the time in a month to learn how to do some of these things, you're not a computer expert. I know people, oh, well, I don't understand computers. Oh, they're just so hard for me. I can't do it. You do lots of things. How many things do you know how to do that you didn't know how to do 2 years ago, 10 years ago? You learn how to do things. People learn how to do stuff. Making money doesn't give you some motivation to do something, then if that's you, then just be happy being poor. There's nothing wrong with being poor. We're going to have many poor people in the world. You don't have to be one of them. If I look back into the 90s and I see the evolution of technology, Bill Gates had an insight that every desktop would have a computer, and that computer would carry Microsoft. And he had that view for many, many years, and people laughed at him. He was on an interview show, I think it was in 1993, and the talk show host thought he was ridiculous. But that world is the world we live in today. I saw tech companies that went up 100, 500 times from 1990 to 2000. Bitcoin, I think, has similar kind of moves and possibly bigger in this decade and into the 2030s. And I think even from these levels, because as I was saying before, money is the killer app. And having a good money where we can store our value is already the killer app. Wintel was Windows and Intel combined, and that created an enormous amount of growth because you had software companies writing for that software hardware stack of Wintel, and so that made Microsoft become an incredibly valuable company. Bitcoin and the Bitcoin ecosystem is even better than that, because what's interesting is that everyone who builds in the Bitcoin ecosystem is benefiting every Bitcoin holder. So when a company is doing something which benefits the Bitcoin ecosystem, I as a Bitcoin holder, you as a Bitcoin holder, we benefit from that. Now, that doesn't mean we make money directly from those companies, but what it does mean is that they help to drive demand for Bitcoin. And as such, we benefit by owning Bitcoin, the way that Microsoft shareholders benefited because software companies who were not Microsoft were developing on that Wintel platform. So you got to benefit by owning Microsoft and Intel. We get to benefit from people who build on Lightning, people who build like Blockstream, building Liquid, which benefits Bitcoin. Any activity which is building demand in Bitcoin benefits us as holders of Bitcoin and benefits every other Bitcoin holder. So that becomes a very powerful force for driving demand for Bitcoin.
CME-backed custodians, really so many things are building this up. It's coming from everywhere. Even energy infrastructure that is Bitcoin mining. I think that the energy sector is going to find Bitcoin proof of work as a killer necessary feature to maintain profitability and competitiveness. When you're not selling energy to the grid, energy producers will be mining Bitcoin.
I think you're probably right, and certainly that'll be a good thing for the Bitcoin network. I forget who said this, but the question was asked: who's held Amazon stock from the beginning? And the answer was only Jeff Bezos and his parents. I'm not going to have held Bitcoin from its beginning, since I didn't buy Bitcoin in its beginning. And I'm guessing you didn't either, CK. And very few of us did, but being able to hold on to it even from here will be quite spectacular. And we tend to overestimate the short term and underestimate the long term. And we underestimate that value of holding things for the long term that are big secular growth opportunities. That goes back to that whole idea of trading. You're going to trade something away because you made a double on it and miss 100x. And you really don't want to do that. It seems so tempting to do, because what will happen so often is that thing will, it might go up 4 times and then it gives up half that value and say, oh my God, how stupid was I? I could have sold it up there and bought it down here. But that hindsight is 2020, and it doesn't really work like that. But people want to convince you that you can do that. And odds are pretty good that you won't do that. Odds are pretty good that if you sell it up 4x, you're not going to buy it back. Or you think you're going to buy it back and you end up not buying it back because you're waiting for the price to go even lower. This happens all the time. I think we're going to see staggering valuation going into the next decade and in the 2020s. I think the numbers are going to be truly crazy. I think you're going to see several $100,000 in the next few years. I think you'll see the $1 million range by the middle of the decade, 2025, 6, 7. I think you could see $3 to $5 million, 2028 to 2032. Those are staggering numbers, but I think that the nature of Bitcoin's scarcity, as more and more people come to understand this, they will want to own it. They'll want to hold it. And even if scaling layers aren't ready for this to be the one and only money used by everyone, accepted everywhere, and by everyone everywhere. That's going to happen in the course of this decade. And that may be the story of the 2030s. I actually think there'll be a lot of development that happens in the 2020s, which make it extremely useful. But I don't think it has to be worth a staggering amount. If you bought 2 Bitcoin today and you sold half a Bitcoin in 3 years and maybe another half a Bitcoin 3 or 4 years later, you'll have made an extraordinary amount of money. And you may have the opportunity to sell it and then buy back what you sold if the prices were to go down substantially, more than 50% from where you sold it. And I think that as we understand how big this thing is called Bitcoin, more and more people will come to the understanding and want to own it. And it's a crazy idea, and it's hard for people to come to terms with. And it will go from being not obvious to being obvious. People listening to this 5 years from now, 10 years from now saying, oh God, I can't believe it. It's so obvious. How did people not get this right? And I believe people will listen to this interview. They'll listen to this podcast 2025, 2030. I mean, if this thing's not lost, which it could be, and maybe it's just as well if it is lost, but they'll say, how did this guy know? How was this so obvious? But I think it is obvious. I think this is obvious. And I think that when you start to think about it the way I do, you'll say, this is the biggest layup that you could ever find of an investment. To me, this is the most obvious opportunity. When I say that to people, I think they think I'm crazy. And probably many people do. But if you're listening to this in the mid-2020s, you'll probably say, damn, I wish I bought that thing. That's how it's going to go.
I actually think that this was my favorite interview yet. And that's pretty tough because number 1 and 2 were absolutely fantastic. Tina, I'm so excited to bring the last episode of this series, The Path to 100 Trillion USD, to everyone. Thank you so much for coming on to the show. Thank you, everyone who listened. If you don't follow Tina already, you can follow him on Twitter at BitcoinTINA. Again, TINA stands for There Is No Alternative. So, BitcoinTINA on Twitter. Thank you again. Come back for episode 4. A quick reminder that all of the content in this episode is for informational and entertainment purposes only. You should not construe the information as legal, tax, investment, financial, or any other advice. Nothing contained in this presentation constitutes a solicitation, recommendation, or offer by BTC Media, the Let's Talk Bitcoin podcast network, or any third-party service provider to buy or sell securities or any other financial instruments. Do your own research.